Most people look at a chart down 90% from the highs and see a dead project. They see the price at 8 cents and assume the network is a ghost town. But if you look at the on-chain data, something genuinely shocking is happening. While the price was collapsing, over $1.3 billion has quietly flowed into the Sonic ecosystem. You heard that right. According to Artemis data, Sonic has attracted over $1 billion in net inflows last year, sitting at rank number 3 across the entire crypto market, beating out almost every other chain except Ethereum and Hyperliquid. So ask yourself this: why is the price at all-time lows if billions of dollars of capital are moving in? Today, I'm going to show you the massive divergence between price and capital flow, the specific catalyst that just stopped the dilution fear in its tracks, and the 3-day technical setup that suggests we might finally be at the bottom of this 10-month bleed. I'm putting my money where my mouth is, but there is one invalidation level that, if lost, makes me walk away for good. Let's dive in. If you've been following the channel, you know my history with this project. I've been open about my position. I have been dollar cost averaging into Sonic since the 25-cent region. And I'll be honest with you, it hasn't been fun. I have given back a lot of the profits from the Fantom era, and watching this bleed from 90 cents in February 2025 down to 8 cents today tests your conviction. Currently, we are trading right around 8 cents. Sentiment is in the gutter. The majority of retail investors have capitulated, assuming the migration to S was a failure. But context is everything. I treat Sonic as a high-risk, high-reward play. It represents about 3% of my total portfolio, with my major positions safely in Bitcoin and Ethereum. That allocation allows me to remain objective here. I'm not betting the farm, but I'm betting on a massive mispricing. And right now, the market is pricing Sonic as if it's going to zero, while the fundamentals show over $1 billion in capital sticking around. The technicals are finally aligning with that reality. But first, you need to understand why the selling pressure is about to dry up. The biggest weight on Sonic's neck has been the fear of dilution. The market has been terrified that the team would print millions of tokens to fund their ETF ambitions, flooding the market while liquidity is low. But that thesis just got invalidated. Look at this update from Sonic Labs dated December 27th. They have officially paused the plan to mint $50 million worth of S tokens for the ETF allocation. Here's the key line. They'll only mint these tokens if the price of S is above 50 cents. Do you understand what this means? The market was pricing in a massive dump of supply at these lows. That supply is now legally gated. It cannot hit the market until we do a nearly 600% move from here. The sell pressure we feared is gone. Now, pair that supply shock with the demand side. This is the chart that nobody is talking about. According to Artemis, Sonic has seen $1.3 billion in net inflows over the last year. This isn't wash trading, this is net capital moving onto the chain. We are seeing billion-dollar inflows while price makes new lows. In technical analysis, we call that a bullish divergence. In fundamental analysis, we call it deep value. On top of that, look at the earnings. Sonic is ranked 4th among Layer 1s for 90-day earnings, generating over $60,000 in revenue, sitting right behind giants like BNB. The network is not dead, it's actually profitable. We also have the institutional angle. SonicStrategy, the first publicly traded company focused on Sonic, has officially started acquiring S tokens, with a lockup period in place. This is the MicroStrategy playbook on a smaller scale. So, let's recap the fundamental landscape. The dilution fear is canceled below 50 cents. The network has over $1 billion in sticky capital, and institutions are buying the lows. The fundamental floor is in. Now, let's see if the chart agrees.
We are looking at the 3-day time frame here because, as a position trader, I don't care about the hourly noise. I care about the macro trend. For 10 months, price has been trapped in this brutal descending channel marked by these orange dotted lines. We peaked at 90 cents, and we've been making lower highs and lower lows ever since. However, look closely at the price action over the last week. We have just broken above a steep descending trend line, that white dotted line on my chart. This is the first sign of life we've seen in months. We are currently finding support right at 7 cents. Why is 7 cents important? It is the 3618 Fibonacci extension level anchored from the June highs. It's also essentially the all-time low support zone. If we lose this, we enter price discovery to the downside, but for now, the bulls are defending it. The immediate obstacle is the 10 and 21 EMAs, those blue lines overhead. We are still trading below them, along with the 55 and 100 EMAs. To confirm a reversal, I need to see a clean 3-day candle close above these blue lines. Now look at the Fibonacci RSI below the price action. We are at extreme oversold levels, record lows since the token migration. But notice the curl? It's turning up. I've drawn a descending trend line on the RSI itself. If we break that orange line on the indicator, that is often a leading signal that momentum has shifted before the price even moves. Volume profile also gives us some hope. The point of control, the price level with the most traded volume, is all the way up at 30 cents. That level acts like a magnet. If we can reclaim the lower range, price will often gravitate rapidly back toward it. Here's my specific strategy. I'm treating the 7 to 9 cent region as my load zone. This is where the risk-to-reward ratio is mathematically best. For my invalidation level, I'm placing a hard stop loss at 7 cents on a weekly closing basis. If we get a weekly candle close below 7 cents, this structure is broken. It means the channel support has failed, and I'll exit my short-term positions, but not the long-term bag. I'm not interested in catching a falling knife if we lose the structure. If this reversal holds, I'll be scaling out into strength using specific targets. I don't sell everything at once. My first target sits at 11 cents, which flips previous support into resistance and marks the 2618 fib. If we clear that, I'll look towards 16 cents at the channel top. Beyond that, the targets become 25 cents, followed by the volume magnet at 30 cents, and eventually the higher volume nodes at 42 and 60 cents. My risk management rule here is simple. If we hit the first target at 11 cents, I move my stop loss to my entry price. If we hit the second target, I move the stop loss to target 1. This guarantees a risk-free trade as early as possible. Let's synthesize this into a game plan. On the bullish side, the no-mint news below 50 cents acts as a supply floor. The $1.3 billion in inflows begins to reflect in the price, and we reclaim the 10 and 21 EMAs. In this scenario, a move from 8 cents back to the channel resistance at 16 cents is a 100% move. A move back to the volume magnet at 30 cents is nearly a 400% move. That's the asymmetry I look for. On the bearish side, we have to consider if Bitcoin loses $80,000, dragging the market down. If Sonic closes a week below 7 cents, I'll hedge. I'll look to open a short position targeting the 5-cent region, which is the 4236 Fibonacci extension. I would look for an overbought signal on the 2-hour Fibonacci RSI to enter that hedge. But right now, with the oscillators this oversold and the fundamental data showing billions in inflows, the probabilities favor the upside for the first time in a long time. To wrap this up, Sonic is an uncomfortable hold. It has been painful. But the data shows a project with $1.3 billion in net flows while the price collapses. And historically, those massive divergences offer the best opportunities for patient position traders. I'm sticking to the plan. Stops at 7 cents, targets starting at 11. Let the chart decide the rest. If you appreciate me sharing my exact entry and exit levels, do me a favor and destroy that like button. It helps the algorithm find more data-driven investors like us. And if you want to stay updated on this trade in real time, join the Crypto Yield Pro Telegram community. The link is in the pinned comment. It's free, and that's where I post my daily thoughts before I can make a video. For more context on how this fits into the bigger picture, check out my macro crypto outlook for 2026 here, or watch my previous Sonic deep dive to see how this thesis has evolved. Thanks for watching, never financial advice, and I'll see you tomorrow in the next one.